What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you informed on what's going on. And if you guys need any help with your crypto needs, join the Bitcoin Ben Crypto Club, or if you want to take advantage of any of our programs we offer, go to bitcoinben.io. So yeah, what's going on in the news today? Bitcoin is booming. Like, what happened yesterday? Like, we were just chilling at 113, 114. That was already a nice pump from the 109 area. But this little day chart going from 113 to 117.8, yeah, let's keep going. But why is it going up, huh? It's like people are like, yesterday we were calling for like news like, what's this U.S. shutdown going to play? Is it has to do with ETFs going on? Or is it going to be worrisome? But a lot of people out there were going, hey, just stay patient, stay strong, and like everything's going to be fine. And from today's prices, it really is. Now, where's our fear and greed index at? We're at a 42 neutral, so we're out of the fearful territory. So we're making our way back up to the greedy area. So people are getting more confident they want to spend. But let's go over this news article on Bitcoin surges as the US shutdown drives ETF inflows. So here's this first article up for you. So Bitcoin has surged above $116,000, which is at 117 right now, as we just saw, on October 1st, as the U.S. government shutdown led investors to seek global safe haven assets, and that is Bitcoin. Now, the development highlights Bitcoin's evolving role in macroeconomic stability, with institutional investors pouring funds into Bitcoin ETFs, driving record inflows and reaffirming its status amid geopolitical and financial uncertainties. Now, Bitcoin's price surged above 116,000 today against the backdrop of the U.S. government shutdown. Now, this marked a significant inflow into Bitcoin ETFs, highlighting a shift in investor preference toward digital assets as a safe haven. Now, the shutdown involved a political deadlock between President Donald Trump's administration and Congress, leading to approximately 750,000 federal employees being furloughed. Now, major institutional actors moved vast sums into Bitcoin, seeking to protect their assets from macro uncertainties. Now, because of this macroeconomic move right now, Bitcoin has surpassed $117,000 amid the federal furloughs. So institutions display an increased appetite for Bitcoin, with ETFs reporting $950 million in inflows over 2 days. Now, this indicates investors' confidence in Bitcoin as a stable asset amidst political risk, contrasting with broader crypto market stagnation. Now, technological and financial outcomes show Bitcoin's market cap reaching $2.32 trillion, and it maintains its dominance. Now, the situation mirrors historical safe haven dynamics, reinforcing that cryptocurrency's role in portfolio diversification amid the macroeconomic stability or instability. Now, parallels have drawn from previous shutdown events. So this event draws parallels prior to government shutdowns out there, with contrasting outcomes based on macroeconomics. In the past years, Bitcoin's performance has varied, rallying during certain crises while also seeking setbacks in others. But experts including Kasabe note that the ETF influence on Bitcoin's trajectory, suggesting that a potential all-time high is coming. Analyst Ted highlights correlations between Bitcoin and other assets like gold, reflecting an 8-week lag between their price movements. Now, here is Ted Pillow's post on that. So Bitcoin has been highly correlated to gold with an 8-week lag. Right now, gold just hit its all-time high, which means Bitcoin will do this next. Maybe we could see another correction, but overall, Q4 will be big for Bitcoin. And we've been seeing a lot of players like talk about this, whether it be Eric Trump, Tim Draper, or who else was it today? I saw another post. Someone else was calling for the $1 million Bitcoin. But no, so with that chart right here showcasing what gold has done, Bitcoin has been following its move. It's just an 8-week lag is what he's saying. So since gold has reached an all-time high, probably at least 7 more weeks from now, Bitcoin can do the exact same thing, pushing the price up to at least 147,000 if it matches this. So let's keep going Bitcoin. So that's some of the bullish news for Bitcoin for why price is moving. There's lots of inflows going into the ETFs, which are buying up more Bitcoin. Another potential possibility for this Bitcoin uprising and crypto market as well is the U.S. Senate is to hold a hearing on crypto taxes as the IRS offers relief on corporate tax. So the U.S. Senate Finance Committee is holding a hearing on Wednesday on crypto asset taxation, following the IRS's release of relief guidance on the Biden-era CAMT tax. So the U.S. Senate Financial Committee will hold a hearing Wednesday on crypto taxation. This is a day after the Treasury Department and Internal Revenue Service issued interim guidance easing corporate crypto tax rules. So the Treasury and the IRS on Tuesday issued interim guidance aimed at easing compliance under the corporate alternative minimum tax, including for companies operating in the digital asset sector. Now signed into law under former President Joe Biden as part of the Inflation Reduction Act of 2022, the CAMT imposes a 15% minimum tax on the financial statement income of large corporations. Now, the two pieces of the latest interim guidance, Notice on 2025-46 and Notice 2025-49, intend to reduce compliance burdens and provide clarity on complex areas of the CAMT until final regulations are issued. Now, are they excluding unrealized gains? Well, one of the guidance documents noticed that 2025-49 provides guidance on applying the CAMT under sections 55, 56A, and 59 of the Internal Revenue Code. So it is particular details amendments to adjust financial statements of their income, allowing digital asset companies to exclude unrealized gains and losses on their digital assets held as a fair value asset from the CAMT income. So, Now, here was the expert notice of the 2025-49. So, in general, the interim guidance in this section 5 provides that for certain items that are measured at fair value, a CAMT entity may adjust the AFSI to disregard gains and losses that are unrealized for regular tax purposes. And then you can see section 5.03 of this notice, which describes the FVI exclusion option. Now, the interim guidance is also in the section 5 also, and then there's 32, provides the CAMT entity may adjust AFSI to disregard certain gains and losses. This is the direction it led to. And then certain AFSI hedges and hedge items, and then you just continue on to see more. But depending on the applicable financial accounting principles, this interim guidance may apply to holdings of digital assets. Notice the 2025-49 states. So according to journalist Eleanor Terrett, companies like Michael Saylor's strategy, which holds more than 640,000 Bitcoin with $13.5 billion in year-to-date unrealized gains, would have faced billions in the CAMT liability without relief. And is this little chart showcase strategies, Bitcoin metrics in the source, or is this just showing their holdings? Yeah, so this is strategy's holdings. They hold 640,031 Bitcoin. Their average purchasing price, I think, is 116. No, that's the current price right now we're at right now. Does it say their Bitcoin average? That's what I always like to hear. Bitcoin gain, BTC. This chart doesn't show. Or is it this one, the BTC Navi? So is this the average cost, 74,000 per coin, which is still not bad. But the Senate hearing on digital asset taxation. So let's talk about this. So the latest guidance from the IRS came a day before the Senate hearing on examining the taxation of digital assets on Wednesday. Now, the hearing will be led by the Finance Committee's chair, Mike Crapo, don't want to call him Crapo, but with the participation of Coinbase Vice President of Tax Lawrence Z. Latkin and Coin Center Policy Director Jason Samsado. Now, the hearing follows the White House Digital Asset Working Group's crypto recommendations in July, which urged lawmakers to recognize crypto as a new asset class and adjust tax rules for securities and commodities to the digital asset. So they're discussing the taxation today, but it looks like for companies holding on to Bitcoin, this is kind of a really big deal. So again, like with Michael Saylor holding billions of unrealized gains on their balance sheets, may not to pay anything now. So again, so this is definitely a bullish news. And again, to like save yourself like on taxes, everything, like you need to have a business. Like I see videos all the time too about like just a tax person talking like, I can't help you with your taxes unless you have a business, because they like that tax code to work around with to actually do write-offs. So this is definitely a bullish section, bullish news just for in crypto's adoption in general, and especially Bitcoin. Now let's continue on with the Bitcoin bandwagon news. I have 2 more articles surrounding it, but crypto miners have been flocking to Brazil on major clean energy surpluses. So yeah, when it comes to Bitcoin mining, it's super pricey. You want good deals and you want clean renewable energy too to use it, just to get the people off your back on Bitcoin's bad for the environment. But the majority of Bitcoin mining is done with clean energy. So let's hear about this, about the miners flocking to Brazil, because I guess there's a surplus of green energy. So crypto miners are looking to use Brazil's clean energy surplus without putting a strain on the grid. So crypto mining might solve a peculiar problem with the renewable energy. Mining firms are negotiating contracts with Brazilian power companies looking to exploit the oversupply of clean energy they have, according to a September 30th report by Reuters. Now, at least 6 crypto mining firms are now negotiating contracts to use a portion of Brazil's abundant green energy for crypto mining. For instance, renewable energy supplier Renova is investing in a $200 million mining project in Brazil's northeast section. Now, this project will feature 6 data centers powered by a wind farm. They said that we aim to expand the company and enter new markets, said Renova. CEO Sergey Brazil said, we realized that by providing all the infrastructures for crypto mining, we were one step ahead of our competitors. Now, crypto mining works well with green energy. Brazil has made a big push in renewable energy. However, wind and solar energy have the disadvantage that their peak production often does not track demand. Now, on the other hand, crypto miners can scale their operations at will, benefiting from cheap energy at the same time they can scale back when energy demand is high. Now, there's tons of potential, said John Blount, co-founder of NGX, a crypto miner based in Kazakhstan. We will try somehow to elaborate mobile data centers, he added, and that would be plugged directly into power plants. So Brazil's oversupply of green energy comes from years of government subsidies in wind and solar power. However, in some areas, this has led to oversupply, and then some energy facilities now waste 70% of the energy they actually generate. So this can definitely help out the energy grid they have there, because if not, they're just wasting that energy. Like gas and oil companies some companies out there have been utilizing flare energy technology to mine Bitcoin. So instead of just like wasting the energy, the oil that they cannot sell off due to reasons or rules they gotta abide by, now they're taking that, putting it into a machine that makes the energy. So it runs like what? It uses the oil or gas, the fuel that powers the machine, which gives you energy. You hook up your miner to it, and boom, you're mining Bitcoin. And that's basically what these guys are doing in the same sense, because they have a surplus of energy. I'm not sure how renewable energy gets thrown out there outside of flaring technology, but so how does it get wasted? I don't know about that part, but now they're just going to be utilizing that because it's 70% of unused energy. It could be perfect for Bitcoin mining out there. So yeah, so a lot of crypto miners are flocking here, Renova just being one of them. Now, speaking of companies and still investing in Bitcoin, like people are still buying every single day, and Metaplanet is not stopping. And now they've become the 4th largest corporate Bitcoin holder after their recent $600 million buy. So yes, Metaplanet's Bitcoin yield surged to 309.8% in late 2024, showing its per share BTC exposure more than tripled before stabilizing at the 33% this year. So Japanese investment company Metaplanet has acquired an additional 5,268 Bitcoin worth roughly $600 million at the current market price. And Metaplanet announced on Wednesday that its latest purchase has brought its total Bitcoin holdings to 30,823 Bitcoin. Now, the move catapulted the Tokyo-listed company to the 4th spot among corporate Bitcoin holders, overtaking the Bitcoin Standard Treasury Company, according to the BitcoinTreasuries.net data. Now, the latest purchase was made at an average price of 17.39 million Japanese yen, or at about $116,000 US. With an aggregated total of $600 million, with the latest purchase, its total holdings ballooned to $3.6 billion and acquired at an average price of around $180,000 per coin. So, it's a nice little dollar cost average there. Now, Bitcoin's Treasury.net data shows that the company's Bitcoin strategy has already generated an unrealized profit of over 7.5%. And here's on that. Now, Metaplanet's Bitcoin yield ballooned to 300% late of 2024. So Metaplanet started adding Bitcoin to its balance sheet in April 2024 and has scaled faster than nearly every other corporate Bitcoin holder out there. Now, the filing shows that its BTC yield rose as high as 309.8% in late 2024 before stabilizing to a 33% this year. Now, Bitcoin yield tracks the percentage change in the ratio of total Bitcoin holdings to fully diluted shares. Now, this gives investors a clearer view of how much Bitcoin backs each share. Now, here is that chart of that. So the fully diluted shares with the Bitcoin per fully diluted Bitcoin yields, and that's where we get, where do we see the 33% right here in the very end. But a 309% Bitcoin yield shows that the speed of Metaplanet's Bitcoin accumulation far outpaced its share in dilution. Now, at the same time, each share had more than 3 times the Bitcoin exposure than when it started. So despite the rapid accumulation speed in the late 2024, the metric stabilized at 33% in 2025, suggesting that while the company is still acquiring Bitcoin, the growth in per share exposure has slowed down. Now, public companies that hold 1 million Bitcoin. So BitcoinTreasuries.net data shows that public companies hold over 1 million Bitcoin, worth about $116 billion. Now, this accounts for about 4.7% of the asset's total supply, and there is only 21 million Bitcoin. That's it. So 4.7% of that 21 million is held in corporate treasuries, and they ain't selling, guys. Now, over Bitcoin and treasuries included exchange-traded funds from the governments, exchanges, and private companies have also reached 3.8 million Bitcoin. Now, altcoin-based treasuries have also gained traction. Ethereum-based treasuries, including reserve entities and the ETFs, hold about 12.14 million Ethereum, which is worth about $52 billion. And if you keep track of, like, what is that one company, Sharplink? It's like their Ethereum accumulation compared to Bitcoin's accumulation, like for the supply that's out there, they have already like matched what it took strategy 4 years to do with Bitcoin. They really only did it in a couple months to a year with Ethereum. But again, Ethereum was cheaper. You can acquire more of it. But it just shows like some companies are putting other treasuries out there, taking a chance. But on the other hand, Solana-based treasuries have also reached 20.92 million SOL, worth about 4.5 billion, according to Strategic SOL Reserve data. So companies are acquiring all different types of cryptocurrencies out there, not just Bitcoin. But this is showing like the move is happening between assets. They're not holding it in dollars. We're not hearing them put it in gold or silver. They're putting it into cryptocurrencies because they see this is the technology of the future. They're preparing their businesses to what the future world is going to look like. So again, you'll be doing yourself a dishonesty for not acquiring any Bitcoin right now, because this is where our future is headed, and you don't want to be left behind and just trying to grab scraps of Satoshis out there. So to start saving some Bitcoin now, it's a long-term investment. Don't think of it as it's going to be making you millions of dollars. You can go buy that Lambo or bank. This is to preserve your wealth in the long run and again, it's also the future of where we're headed. So just get some now and don't even worry about it. But let's take a quick commercial break right now, and then we'll continue on with my final 3 articles for you on how Africans use stablecoins in their country. Phantom Wallet gets their own crypto card, and BNB X account was hacked, and there was some phishing attacks there. So we'll be covering those last 3 articles after this quick commercial break. So see you in a minute.
For years, banks promised innovation, but they gave us fees and friction and fine prints. Today, all that changes. Introducing Private Key Bank from Bitcoin Ben's Crypto Club, the world's first Bitcoin native credit union. Rebuilt from the ground up in the heart of El Salvador, a place where your Bitcoin isn't just stored, it grows. Earn 4% interest paid in Bitcoin, compounded, secured, and accessible. No middlemen, no hidden games, just your money working for you. Send funds across borders instantly, without SWIFT codes, without currency conversions. Pay anyone, anywhere, with a tap of a finger. This isn't banking as usual. This is freedom, beautifully engineered. The future of finance is finally here.
And we are back, guys. And so yeah, if you want some more information about the Private Key Capital, go to text us at 941-413-8080. So let's dive right back into the news. How are Africans using stablecoins to survive inflation? Well, let's find out in this how-to article from Cointelegraph. Now, I do like Cointelegraph for a lot of my news articles. I like how they're written, I like how they're presented, and they sometimes have these how-tos and optional informations. So if you're ever looking for some crypto news, Cointelegraph can be one of them. But again, I use all charts to look at it. So if I'm over here, I'll go to CoinMarketCap, go to products, news, and then it's pulling me news articles from many platforms: Crypto.news, CoinPaper, Crypto Briefing, even Cointelegraph's on here. So that's how I find my news articles, just if you guys were curious. But let's continue on with the news. So again, how from Nairobi to Lagos, how are Africans using stablecoins to survive inflation? So in Nairobi and Lagos, stablecoins like USDT and USDC help people fight inflation. It cut costly remittances and moved money through mobile wallets such as the M-Pesa. So let's hear about this. So on Tuesday morning in Nairobi, Amina invoices a client in Berlin. By the afternoon, USDC has landed in her wallet, and within minutes, she cashes out to the M-Pesa, and what once felt like experimental is now just a routine, thanks to services like Kotani Pay that tie stablecoins to mobile money. So across the continent in Lagos, Shindu runs a small shop and keeps his working capital in Tether's USDT. Now, holding digital dollars means he can restock imports without watching his margins vanish to the Naira's volatility. He is hardly an outlier. Between July of 2023 and June 2024. Nigeria alone has processed nearly $22 billion in stablecoin transactions, by far the largest volume in sub-Saharan Africa. Now, the draw is economic. So sending money into the region through a traditional remittance channel still costs an average of 8.45%, and that data was from quarter 3 of 2024. While the digital-first operators have brought fees closer to just 4%, so at least half of what they were originally paying. Now let's add in stablecoins. They hop in and they are a reliable cash out option, and the savings grow sharper, especially on the $200 to $1,000 transfers that sustain families and small businesses. Now the costs vary by market, but the principle holds. For millions navigating inflation, currency controls, and the world's priciest remittance corridors, stablecoins offer a way to hold value and move money with a little more than just a phone. Now, here's one of those kiosks that takes place. I know it's not so up and running. It's like a little box out there going, what? That's where they're doing it? This is Africa. It's not America. It's not Europe. So their culture and their surroundings do look a little different, but this is where it's happening. Now, the macro squeeze in inflation and the foreign exchange and remittance friction, Nigeria's cost of living crisis hasn't disappeared. Inflation has eased from early 2025 highs, but remains punishing, with the headline consumer price index at 21.88% in July, well above the target and steadily eroding purchasing power. Now, currency reforms since 2023 include multiple devaluations and shifts toward a market-driven foreign exchange regime, now have only heightened short-term volatility for households and importers who price necessities in dollars. Now, Kenya's picture is milder, but follows the same pattern. Inflation ticked up to 4.5% in August, driven by rising food and transport costs, while the shilling swings kept USD demand high among traders. Now, on top of this is the world's most expensive remittance corridor. The World Bank remittance prices worldwide reports show that sub-Saharan Africa, averaging 8.45% in quarter 3 of 2024, well above the UN's 3% Sustainable Development Goals target and higher than the global average of 6%. So for families sending $200 to $500 at a time, those costs can be difference between paying rent on time and falling behind. Now, these pressures explain why stablecoins have become particularly practical solutions for freelancers, traders, and small businesses from Nairobi to Lagos. Now, here's a chart in the sub-Saharan, let's see, and this is a stablecoin value that has been received. Now, why stablecoins? The practical economics of it. So for people earnings across borders or savings in weak local currencies, stablecoins act as a digital dollar with two clear advantages. Transfers are clear around the clock, and then fees are often lower than the traditional money services, especially for cross-border payments. So that mix of speed and affordability explains much of the traction in emerging markets. Now, in sub-Saharan Africa, this is already visible on the ground. Chain analysis data shows that stablecoins now make up the largest share of everyday crypto activity. In Nigeria alone, transactions under $1 million were dominated by stablecoins, adding up to nearly $3 billion in quarter 1 of 2024. And across the region, stablecoins account for roughly 40 to 43% of the total crypto volume out there. And here's that chart of the locations using stablecoins. So you still have Uganda, Ethiopia, Zambia, Kenya, Ghana, South Africa, but Nigeria is the highest of using stablecoins in volume. Now, Tether's USDT and USDC remain the leading options at the edge where cost decides behavior. Now, Tron has emerged as a preferred network for moving USDT, but by mid-2025, it carried the largest share of USDT supply. Now, the logic is simple. People follow whatever option is cheapest and most reliable to do. Now, how it works on the ground, we have the on and off ramps and peer-to-peer. In Kenya and Nigeria, most people get USDT or USDC through a mix of regulated fintechs and peer-to-peer marketplaces, then cash in or out via banks or mobile money. Now, the yellow card is active in about 20 African countries, and it runs most of its transfers in USDT. Its YellowPay service connects users across borders and supports local cash outs, including mobile money. Now, today, stablecoins make up 99% of Yellow Card's business. So, ooh, dang, that is some good news. That's bullish. Now, mobile money bridges in East Africa, the backbone is M-Pesa. And other mobile wallets, Kotani Pay provides conversion services that let partners settle in stablecoins and pay directly into the M-Pesa. Now, Mercy Corp's Kenya pilot used Kotani to test its USDC to M-Pesa savings, and the flow is straightforward. Receive in USDC, convert to shillings, and spend through the same wallet people already use. Now, fintech companies have also scaled up. Some companies keep their crypto layer invisible. Chipper Cash, for example, uses USDC behind the scenes to move dollars instantly across the network. It has also started using Ripple's technology to bring funds into the 9 African markets for customers, and it feels like a faster, cheaper version of a familiar wallet. Now, everyday use cases for this is, again, savings. You're converting small balances into digital dollars to protect against inflation. You got payroll and gigs, so freelancers and creators often get paid in USDC, converting only what they need into the local currency. And trade and inventory. Small and medium-sized enterprises settle invoices, pay suppliers in stable coins. Again, Yellow Card cites business payments among its fastest-growing segments. And the final everyday use case is remittances. Stablecoin transfers with the local cash-out option often beat traditional remittance services, especially on a $200 to $1,000 transfer. And mobile money is already everywhere. With more than 2 billion registered accounts globally, the sub-Saharan Africa sits at the center of this trend. Now, how's the regulation and policy drift going? In Nigeria, the regulatory stance has shifted sharply in recent years from prohibition to cautious permission, and now towards stricter policing. In December of 2023, the Central Bank of Nigeria lifted its banking ban and allowed banks to open accounts for virtual asset service providers. But in 2024, the tide turned again. Authorities cracked down on the Naira peer-to-peer venues and Binance, detaining executives, halting Naira pairs, and warning of additional rules against illicit trading. Now, cases and disputes have continued into 2025, but meanwhile, Nigeria's Securities and Exchange Commission updated its crypto framework in January 2025, and the new Investment and Securities Act, now law, clarified registration duties for digital asset firms, and now more licensing disclosure and marketing scrutiny are expected. And that's in Nigeria. Now in Kenya, the Finance Act of 2023 introduced a 3% digital asset tax, and it upheld by the Supreme Court in late 2024. But policy shifted again in mid-2025. So the Finance Act of 2025 repealed the levy and replaced it with a 10% exercise duty on fees charged by virtual asset providers. Now, users and operators now need to track and excise VAT, DST, and reporting obligations. Ultimately, frameworks are evolving quickly, and always check the latest local guidance before choosing the provider. Now, the risk ledger. So stablecoins may solve problems of speed and cost, but they carry risks of their own, which fall into 3 main categories. We have the peg and counterparty. Stablecoins are only as reliable as the reserves and governance behind them. So the Bank for International Settlements and the International Monetary Fund analysis warns that the rapid growth could trigger financial stability issues, from forced sales of reserve assets to dollarization that undermines local monetary control. Now, USDC depegged back in March of 2023 and showed how quickly confidence shocks can spread. And independent reviews have also flagged transparency gaps and issue concentration as ongoing concerns. And yeah, that USDC crash or depegging happened during the 2023 Silicon Valley, Silvergate, and was it Citibank? It was one other bank out there when that was experienced its bank run, got its government bailout, and then basically USDC got repegged to the dollar. But that was one of the main issues because of it. And then the other issue is it's operational. On the ground, everyday risks include peer-to-peer scams, wallet theft, bridge failures, and difficulties just cashing out. Regulatory actions can make matters worse. Now, Nigeria's crackdown in 2024 in 2025 froze accounts and stranded balances overnight, illustrating how suddenly access can disappear. And then lastly is policy. A systematic level, heavy reliance on dollar-linked stablecoins can accelerate informal dollarization and shift payments outside regulated banking channels. So in response, policymakers are pushing for tighter licensing, stricter reserves and reserve standards, and more disclosure from their issuers. Now, what comes next for stablecoins in Africa? So stablecoins won't solve inflation or rewrite foreign exchange policy, but they already make savings, getting paid and sending money across borders cheaper and faster for many Nairobi, Lagos, and beyond. Now, their integration with mobile money is what makes them feel practical. Builders frame stablecoins as tools for everyday utility, while regulators worry about dollarization and financial stability. Now, the balance between these two forces will shape what comes next. On the ground, the safest approach is still just straightforward. Keep costs low, stick with trustworthy providers, and stay alert as rules evolve. Now, what's likely ahead is clearer disclosure requirements, tougher licenses, and more crypto in the background services, where users just don't even see tokens at all. They just value moving instantly and at lower cost. So that's what's going to come. But that is what's happening in South Africa and just Africa in general. They're utilizing stable coins to help fight against inflation out there. And it's a little bit different than how we do it out here, but these are the tools they have and they are utilizing it. So yeah, so I love seeing these articles, just like how are people using it around the world. This is stable coins. I really like hearing the news of Bitcoinization. Like how are they using Bitcoin in everyday life? Like those are the best articles I love seeing. But this is still a great news. It's adoption news because, again, people are using blockchain technology out there. And yeah, stablecoins are centralized. There are some risks behind it. Again, that's why I have Bitcoin, which is decentralized. It's hard capped. Volatility will eventually go away with it. But again, it's secure, it's safe, and I just love all this adoption news that comes out. Now let's talk about Phantom's wallet's new crypto card I guess they just got. So crypto wallet Phantom unveils stablecoin and payment services. So the crypto wallet provider Phantom introduced its own stablecoin and a new payment feature set to rival more expansive financial platforms out there. Interesting. So the popular Solana crypto wallet Phantom unveiled Cash, a new US dollar pegged stablecoin built in collaboration with Stripe and Bridge that will underpin its new financial platform called Phantom Cash. Now, designed by the wallet provider, Cash was created using stablecoin infrastructure provider Bridge's new open issuance platform that allows any business to create its own stablecoin. And didn't we get news on this the other day? It was like another partnership to do. I think it was like Europe or somebody was using them. But stablecoins are the atomic unit of consumer finance, but nothing out there made sense for Phantom. Phantom VP of Strategy, Donnie Dinch, posted on X. So we designed the stable that we were looking for, and it's open for any builder to use. Now, builders and businesses that use Cash will keep 100% of the net revenue, differentiating it from other stablecoins. To Cash's website, you can get more info on that. But at first, the token will only be deployed on Solana, but it is expected to expand to other chains in the future. Now, Cash's first use case will be inside Phantom Cash, the new financial network that builds on Phantom's existing wallet, with new features like instant bank funding, peer-to-peer payments, and Visa debit card, and rewards on unspent stablecoins. He said that we wanted to create a better financial consumer platform for people in order to do that we needed to offer for a more diverse set of things that you could do in a product, said Dinch on the live stream broadcast. Now, finally, one place for all your money. Funds instantly link your bank or card and start using the funds right away. You can buy and sell crypto fast without the fees on stablecoins. You can tap to pay with Apple Pay or Google Pay or anywhere Visa is accepted, and pay friends in a few taps. So, yeah, the platform will be available in limited early access, but is expected to roll out next month. Now, a waitlist is currently open for those in the eligible jurisdictions. So at the start of the year, Phantom boasted as many as 15 million monthly active users of its crypto wallet, which supports Solana, Bitcoin, and Ethereum, and other popular blockchains. And in January, it raised $150 million in a Series C funding round, which valued the firm at $3 billion now. So Phantom's doing pretty well, and this new card and feature looks pretty cool. Again, though, if you're going to be using this feature for the buy and sell options, don't make your Phantom wallet your main savings account wallet, because the moment you link up your wallet or your bank account to it, that wallet's no longer private. Like at first it was just your seed phrase, that was it. You never gave up a name or nothing to it. But the moment you start buying or selling using that wallet, then it's like, oh, the bank knows that this is my wallet. Oh, are they going to tell the IRS and government? Of course they are. So now they know, oh, he purchased Bitcoin. This is his wallet, or they purchased crypto. They can view the public blockchain. Oh, he's got some crypto in there. Okay, so again, so if you do utilize this payment, still always have a separate wallet just for savings. One will be for spending and then moving stuff around, doing trades. It's just like this is the one like you can leave open, but you always want your savings wallet to be hidden, not linked with any bank services. Anything gets done, you send it to the other wallet to do it. But no, this is some pretty cool news out there. I guess they had a pretty good, cool commercial about it that I saw from Ivan on Tech this morning. So if you want to check out their Twitter account. Now, last little piece of news article I have for you is the BNB chain hack update. So X account has reclaimed after a $13,000 theft, and victims are to be compensated by it. So let's hear about this update, because I'm pretty sure I covered this article, but no, this is an update to it. So the BNB chain hack compromised the project's official X account after attackers posted phishing links that led to losses, but the account has since been restored. So BNB chain has successfully regained control of its official X account, following a brief but impactful hack that saw malicious actors promote a fake BNB airdrop website. The security breach, which occurred earlier today, resulted in roughly $13,000 in losses. So tiny, but still losses out there to some victims. Now, in an official statement, the team confirmed that they have gone full access to the compromised account, removing all the affected posts. And here is BNB's post letting the community know about it. So while the root cause of the breach remains still under investigation, preliminary findings show that the attacker posted 10 phishing links, leading to $8,000 in losses across all chains, including a single loser losing $6,500. Now, separately, the attacker also manipulated a phishing contract, injecting $17,800 and later withdrawing meme tokens for $22,000, netting an additional $4,000 profit. Now, combine these actions and the accounts for the hackers' total gain of approximately $13,000. Now, BNB Chain said further details will be shared as the investigation continues and reiterates its commitments to strengthening our security to prevent future incidents. Now, the BNB Chain to compensate the hack victims. So that's good on them for doing it. The protocol added in an update that all affected users will be reimbursed, though it did not provide details on this process. Now, Binance founder Changpeng Zhao also weighed in on the incident, confirming the recovery of the X account and planned compensation. He said that the hacker got $13,000. The security teams are still tracking. With a possible link to the KYC, he could have made more by building Zhao. Now, CZ emphasized the distinction between social media security and blockchain platform security. He noted that most of the Binance community remained unaffected by the phishing scam, showing strong awareness and resistance to such social engineering hacks out there. So I'm hoping that you guys out there watching this video are aware of the phishing scams out there, and you know not to click on links. Always verify first. I know it was a trusted source, but you don't know if they got hacked or not. So I know you're trying to rush the game out there, but you should see the signs if something doesn't look fishy at all. Like even by the time like it took you to another site for the airdrop, like you want to be certain like you're reading that transaction detail. You're just not clicking confirm. You're verifying. You're reading. It's like, okay, what is this? What am I clicking on? What am I verifying or approving? So hopefully a lot of you do know that to stay safe, be on high alert, verify URLs, verify the emails, like wherever the scam is coming from for phishing attacks. Just verify everything before you do anything. It's always safer to do nothing than it is to actually go through with it. If you're feeling unaware about it, if you're just unsure, give the club a call. Any one of our club locations, we can help you out by just giving you a quick answer. Just give us a little bit of info and we'll be like, yep, that's a scam. Do not do it at all. So just let us know and we can help you out there. But let's continue on. So meanwhile, the Binance coin has remained stable despite the hack on the project's X account per Crypto.news data, and BNB currently trades at $1,000. Oh wow, so we're above the 1,000, which with gains of 2.47% over the last 24 hours. So very, very nice BNB. So that wasn't really affected. It was a small amount, so like 13,000 in total. But again, luckily, the BNB team and Changpeng Zhao CZ said they will do a reimbursement. Just no data or information is on that yet, so be on the lookout for how, if you are affected, especially that $6,500 dude, hopefully you can find out how to get that reimbursement take place. But that is it for the news I have for you today. Bitcoin is where are we at now by the end of this video? We are at 118. Bitcoin just touched 118,000. Oh, we just went back down. But let's go. Let's keep this ride going now. Is altcoin season going to be coming? I hope soon. It's always this way. It's happening. It's coming. But hey, we're in Uptober right now. Like September was. Did it end up being Rectember? I really don't know. Like did we start off the month with it good? No. I gotta take a look at that chart. We're looking at this. September still ended. Let's see, the final day. When's our final cutoff? Right here. So around there, that chart. See where the little green bubble is around moving it. So no, actually, September looks like it did end in the green. So this would be the third month that it wasn't Rectember. But hey, like though this little line right here, this consolidation, that is bullish signs for October to continue rising. So yes, we're in October, guys. Keep stacking those sats, dollar cost average to lower your entry point, and just hodl for the long term, guys, because this is a fun journey with adoption going on, rules and stuff changing. So just hold on tight. But guys, thank you for tuning in today's show. What do I got today? I got to prepare for tomorrow's class. I got to get ready for Thursday's meetup. And yeah, so guys, if you're in the Sarasota area, tomorrow is our crypto meetup. And we're going to be talking about Bitcoin versus all other assets out there. We're going to have a special guest, Dave B. I call him Finance Dave, but no, he'll be able to talk about the other side. So I got you covered on the Bitcoin and crypto side to talk about that, but he'll be there to talk about stocks, bonds, insurance. I'm not sure exactly, but he'll be talking about finance. So definitely come on down. We're going to have sandwiches. It's a great community event to see the crypto community here in Sarasota. So hopefully we'll see you guys then. But everyone have an awesome rest of your day. Joe, I will see you in a little bit. I saw our meeting today, so I will see you in a little bit. But everyone, take care. Peace. I love you guys.
In a world where your data is constantly under attack, one company stands for your digital freedom. Introducing Calyx Solutions, your gateway to ultimate online privacy and secure cryptocurrency trading. Meet the Liberty Laptop. With its modified OS and advanced tracking prevention, it's your shield against surveillance. Access restricted areas, use recommended security software, and browse with confidence. Your digital footprint? Virtually non-existent. For the crypto pros, we present the Crypto Laptop. Pre-configured on premium hardware for secure trading. Optimized for your favorite wallets and exchanges. It's the fortress your digital assets deserve. Both laptops come with expert individual training and support. You're never alone in your journey to digital empowerment. At Calyx Solutions, we put you in control. No more worrying about data breaches or compromised transactions. Ready to join the revolution? Visit calyxsolutions.io and choose your perfect laptop today. Plus, become an affiliate and earn while sharing the power of digital freedom. Calyx Solutions. Unlock your digital freedom. Give us a call or text at 702-845-8276 or visit us directly at calyxsolutions.io.